Hi traders, and welcome to another Forex trading educational video. And in this video we will be taking a look at the importance of psychological price levels in Forex trading. Now, psychological price levels are certain price levels that are likely to draw big market attention from central banks and financial institutions. And these key psychological levels include weekly, monthly, yearly highs and lows, all-time highs and lows, and rounded numbers. Now, rounded numbers include something like 0.5, 1.7 or 1.2. That are nice rounded numbers in the Forex market. And these psychological levels tend to yield a reaction by price when they are tested. So when the market hits a nice psychological level, for example the 0.5 level, then there tends to be some sort of price reaction at this specific psychological level because it's a nice rounded level in a specific Forex currency pair. Now, these levels are used for its simplicity by the big market movers as stop and take profit levels, and adds confluence to your specific trading plan. So they can be nice stop loss or take profit areas for you to be aware of whenever you are trading a specific currency pair. So some important rounded numbers that you can be aware of in the market for the Euro USD is 1.24. For the Australian dollar US dollar currency pair is 0.78, and then for the dollar Canadian dollar is 1.3. So let's quickly jump into the live markets and I'll show you exactly what I mean by key psychological levels and the reaction that the market tends to have at these specific levels. So let's quickly go through some psychological levels on the Euro USD chart. So this is on a daily candlestick and this is for a 1 year time period. And let's just quickly go back to last year around April, and as you can see at this 1.08 rounded number in the market, this is a key psychological level on the Euro USD. You can see that the market tested this specific level a couple of times, and with each test you see a reaction in price. So as price hits this psychological level, it reacts in an upward fashion like this on numerous occasions, and then the most recent one over here with this massive upward rally. The same can be said for this 1.1 level on the Euro USD, which acted as a strong resistance area over here for these three periods, and was then eventually broken for this upward rally. So looking at a more recent psychological level, the 1.16 level, which also had some reaction to price, and as you can see, price just came into this psychological level and a massive rally higher followed. So with the most recent psychological level being this 1.23 and the 1.2 level on the Euro USD. So let's just quickly zoom in a bit so I can show you in more detail how the market reacted at these separate levels in the Euro USD currency pair. So let's just zoom into this 1.2 psychological level over here on the Euro USD. Sorry, that's a bit too big. This 1.2 psychological level. So as you can see, the market approaches the psychological level. You can see this liquidity spike in this bearish candle over here. Let's zoom in some more. So this is on a 4-hour time frame. So the market just pushes price into this level and a big reaction follows. So this was around 80 pips, so an 80 pip move after this massive 1.2 psychological level on the Euro USD. So if you were aware of this 1.2 psychological level, you could have entered a nice quick scalping trade over here, a nice short trade, and this would have been a very easy 80 pips to take on the Euro USD. So let's quickly look at a more recent psychological level on the Euro USD, which is then the 1.23 over here. So as you can see, tested, reaction, and there is some uncertainty at the moment. So the next big psychological level on the Euro USD is then the 1.24 psychological level. So if this 1.24 level is hit, we can then assume there's going to be some sort of reaction at this level. You can also see, let's just zoom back out a bit. Let's go to a monthly time frame, and you can see the 1.24 psychological level has last been hit about 2 years ago. So that is also a very good area to be aware of. So let's quickly go through the Aussie US dollar chart as well. Let's quickly add some psychological levels. So a good psychological level on this pair is the nice rounded 0.7 level. So I just simply add a horizontal line on TradingView. Let's just make the coordinates 0.7 like that. And again, as you can see, it acted as a good support area for price to bounce and react, and then most recently it reacted as a nice support area for this massive rally higher. So a few minutes ago we hit this another psychological level above over here, the 0.78 psychological level, and this specific currency pair has just been on a massive upward rally since the start of November. So we might see some sort of relief, maybe some pullback into the 0.76 area, or maybe a complete reversal, but I doubt that. So let's go to a smaller time frame over here, and as you can see, this psychological level of 0.78 has just recently been hit. So we can assume a reaction in price at this area, maybe to these lows over here, or even these lows or these lows. This is also a nice upward trend line and even a rising wedge over here. So we can even assume some corrective move over here to this area. So we'll have to wait for a setup when it appears. So this is the Aussie US dollar, and another quick Forex pair is the US dollar Canadian dollar pair. So a very important level on this pair is the 1.3 psychological level. So let's quickly add that visually to this chart. So as you can see over here, look at this perfect example of a liquidity spike on the daily candlestick over here, as you can see. So literally the orders were just entered over here at 1.3. I'm just going to zoom in a bit to this area in the market. So price rallied lower, it literally just hit the 1.3 psychological level, as you can see with this spike. So this was a black candle, or a bearish candle. For those who don't use this color scheme, that would be a red candle. So the red candle or the bearish candle turned into a bullish candle after this psychological level was hit. And look at this massive rally. It was a 400 pip move, literally from this one key psychological level. So that is just to show you the impact and the importance that these key psychological levels can have in the Forex markets, and it's so important to be aware of them whenever you are trading, because they can either be favorable or they can make some serious damage to your trade. So hopefully you learned something from this video, and now you have a better understanding of just how important these psychological levels are. Thanks for watching, guys. If you like these videos, then make sure to leave a like and subscribe for some more additional Forex trading educational videos. So yeah, thank you and take care.